All right, let's jump into things. Pretty much smack bang on 11, actually, one past 11. 24th of September. So RBA Tuesday coming out this afternoon. So look, with that, I'll sort of start off with Aussie because Aussie really, this has just been such a structurally great sort of trade. Look at, I mean, just a recap, we've been buying up to above 68, shorting it down to this 38% retracement. Got on the long side again, and look, it's just had this nice channel break, and it just hasn't really looked back since. It's just been sort of coming up, 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 did start to look a little bit sort of iffy around that sort of, uh, excuse me, FOMC period. But apart from that, it hasn't really sort of shaken it up too much because obviously it recovered that, took out the highs, and now we're pushing right up into that resistance zone. So where we sort of have sort of just sold back from just previously overnight, I actually sort of got my last ones off at like 52 or something like this. So I really sort of maximized this trade up into this top end over here. Um, it's not a sort of shocker as to why we're sort of selling down. And this is the thing, around this area is vital, it's super, super crucial, sorry, for Aussie because, we've got the most previous highs just before the sell down in this move. We go just above that though, we've got the highs from end of last year. So this is why we sort of found a little bit of resistance right now. So technically, if we look at this is January here, so where's January? Where's our yearly open? That is it. That's a new yearly high, which is what I've been saying all year, basically. Well, all year. So for the last couple of months and that we were going to see new yearly highs on Aussie, and that has been booked in overnight. So let me just let's mark out where our yearly open is. Let's pop this here for one sec. Jump onto a daily. So this is, and so put this here because this is actually technically yearly open because this is the first day trade. Let's go text. Yearly open, and so on here was yearly high. So there we go, locked in. First time we've sort of been up into that top end since since January. Because remember, we were on that big, massive rip up through last quarter of last year. This solid move all the way up here, and yeah, I mean, I've said it a number of times. I thought the pullback here would come up and put us in with a second higher high, but it didn't. It just dribbled. It sort of sat here for a bit and then just went down, 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 down. So I got smashed in this period here. But here we are putting in new yearly highs. We're up against the resistance area. So this is why we've got this area marked out over here. And this is what we tipped into overnight. So that's just a little bit of a background on sort of why we're sort of seeing a little bit of selling at this point. Now, as I said, we've got RBA today. It's pretty much widely sort of assumed, and you would say in that respect also priced into the market that the RBA is gonna hold. The times that you'll see super fireworks is if I don't think this is going to happen. I'm just saying this as a point, is if they cut. If the whole market's going, yep, okay, they're going to hold, they're hawkish, which, I mean, they are. If you listen to all the talk and that, and you look at the state of everything, they are. They're pretty much guaranteed to hold, with anything slightly more towards a hawkish hike side, which they have been sort of talking about and threatening for a while. But I think that all things considered, a hold is most likely with it all. And I think that seems to be widely what's spoken about, particularly by like some large banks and all this kind of stuff as well, the people that actually are pricing these kind of moves in. So with that, you're going to be looking not so much for the actual RBA data drop of them sort of the actual rate decision. You're not going to be going, okay, well, what's happening? Bang, market's expecting the hold and then they hold. No shock factor. So you're not going to see massive moves or anything like that with that kind of outcome. The press conference is what we're really going to be looking for. The press conference is going to be where we're going to sort of hear what kind of language are they using. Are they maintaining their sort of hawkish kind of sort of stance with it all, where they're sort of going to be saying, look, you know what, we're prepared to do what needs to be done, and You know what I mean? Hikes aren't off the table. If we hear that kind of talk, Aussie's going to take off. If they sort of say that, look, we've sort of been talking about it as discussions, but most likely we're not going to, we think sort of we're past that point of hiking or even sort of thinking about hikes. That means that obviously that kind of talking and terminology is more dovish. And a dovish sort of rhetoric or sort of way of speaking is going to sort of give a little bit more of a sort of a weakening to the Aussie dollar because, of course, you know, you want to see the idea that they're going to potentially be raising rates. You want to see that they're going to be sort of potentially, you know, going to sort of push things a bit higher or at least hold for longer, and that will give more strength to the Aussie. Now, while where that's sort of super important at the moment is that Aussie, as we can see, is coming right up into these resistance areas. So if we go back to where we were 2 seconds ago, we know that, you know, between 34, so 68, 34 and 68, 60 odd, you know, these are pretty strong. I mean, that was the high last year, bang, sold down. We get above that, we're going back to July last year. And again, it's kind of odd, but every time it's run into these periods, look at how strong these moves have been. I mean, I remember this happening, and you know, we went 66.86 to, you know, that's nearly 200 points in 2 days. So I'll just saying Aussie sort of take off a little bit here. Just bear with us 2 secs. All right, cool. Yeah, we're just seeing sort of metals just sort of pop off and that, and seem to still be sort of rising quite strongly there. So yeah, just had to sort of manage a few positions. Anyway, back to what we were talking about. So as it's run into this period every time, I mean, look at how strong this move is here, how strong this move is here, how strong this move is in here. It's not sort of doing a sort of dribble into these areas. It's really going up and then turning on a dime, going up and turning on a dime, going up and turning on a dime. There's no sort of consolidate up along the top and then fail down. And you know, even with this period, I mean, the singular sort of days aren't so big here, but this is a very strong bullish move through here. And remember, with this setup through here, technically you've got a price target up at 71, technically. So, you know, I mean, a lot is sort of riding on getting through this area here. You break through, say, 69, because as I see, if we go back to these levels here, 69 is where they sort of capped it. If we break through 69 here, that's a pretty smooth run up to, yeah, I mean, look, it's not going to go all the way straight up over here, but, you know, we've got some levels of resistance that we can drag down through here. You know, that measure move comes in very much in line with the start of 2023 highs. And when you see a couple of these things like measure moves sort of line up with levels and you see sort of, you know, a resistance area, this is going to be a very strong sort of magnet for things because you've got a lot of the market. Anybody that's trading this measured move, anybody that's sort of like, you know, for whatever reason, they might be sort of going, yep, that's as high as, excuse me, we're going to take it. They'll be watching these areas here. So I know these sort of things seem like, oh, no, may never get to that area, but, you know, we are sort of moving through this technical area. We've taken out these previous highs over here. I mean, I'm not really one for a cup and handle kind of person, but even with a cup and handle, which is technically this kind of move here, even this gives you quite a decent, and this is not including the wick, if we were just to go to the rounded bottom there, that puts you up into this level here as well. So now all of a sudden you've got a bit of a cup and handle with a 38% retracement of that move, I suppose. But still, the cup and handle, you've got the flag, you've got the sort of like long-term high resistance levels. Quite a few things are sort of lining up to sort of say that they might sort of be pushing up there. So that's certainly something to keep an eye on. And we're just seeing Aussie is absolutely sort of ripping off at the moment. So I'm just going to manage some positions very quickly. As you can see, you can't really see this on the daily here, but let's pop this onto a lower time frame. This is why I'm managing the positions, because Aussie's just going bang up through the roof. So anyway, look, that's the big picture with Aussie, as I like to do, you know, a bit of a big picture kind of thing, and then we can sort of drill down and sort of see what we're seeing on the lower time frames where we can sort of see what we can do today. So this would be a little bit of a channel that we sort of see coming through here. Seems to be lining up and feel pretty good when you put this one together. Even just a smaller little flag break through here would be giving us a price level, or price target, sorry, up around 68.76 in that level there. So I think certainly if we take out 52, this would be where I'd be looking for 68.76. I think that given how much this is just jumping off right now, we've got the RBA coming today. We know that they're going to have most likely a pretty hawkish sort of stance. I'll get on to sort of DXY in a moment, which of course we all know DXY isn't part of Aussie, but Aussie isn't part of DXY, but it is part of a broader idea about what the market's doing with the US dollar. So if we see US dollar being sold off against all your other majors, most likely they're going to be selling it off against Aussie as well. Not only that, are they going to be sort of adding into the fact that RBA are the only hawkish central bank left at the moment. Everybody else is cutting. So where are the funds going to go? Where are people going to want to put their money towards? Well, it's a sort of bit of a what's it called shocker. No. But yeah, anyway, it's going towards Aussie most likely. So anyway, so I get a little bit distracted with these things. So let's put a little zone up at the top over here. So take out 50, 53 and change in that. That's a little price target that we can be looking for just up above here for a little sort of intraday price target. But again, with these news events, they can really just disregard what your this little price target. They can disregard your sort of technicals. Because really we are in a bullish thing. We've got a breakout, we've got a back test, and now it's pushing up to the top side over here. But I would say realistic position of where we could sort of see the market move to above 53 is then another 23 points up to 68.70. Sorry, 68.76. That level through there. All right, cool. So let's move on. Speaking of DXY, DXY is still very much just sideways. Get onto a better time frame, put it on a 4 hour. And we can see that sort of like all these rally attempts and that, they're really just getting bonked on the nose. But, you know, in such a tight tussle here because you've got the sort of, the buyers are just very clearly sitting down the bottom here. You give them a shot, they'll take it. But still unable to close above this zone over here. So we know that the sellers are sitting here. So this is really starting to tighten up because look at these swings through here. It's sort of like, you know, it's just up, down, up, down, up, down, which, you know, volatility wise is great for short term. And it just sort of means that when we do get the break, we're going to see something pop off. So then we can start to look, okay, where would the sort of because this has been quite a defined range, we can start to sort of put a little bit of a measured move on this one as well. We can say a measured move of this range here moves us bang back out to the top end here, and this is exactly what I was saying with the other chart a moment ago, that when you start to see a few things line up, you start to go, okay, well, this is a very plausible area that things could move to. So we get a break out the top end here, we come up the top side here, we hit this massive falling resistance, which is really cutting through. We know that won't go through first time. We know sellers are sitting up in this area over here. And then anybody that's just going to be trading the measured move break of this little range, they'll be taking profit around this area here. So if we do see a break and a sort of close up to the top side over here, let things run up, let it push up into this sort of 107, 108, 101.7 to 101.8 kind of area, and then expect some US dollar selling to come in again. And likewise on a break to the downside, we're looking at, you know, a fairly sort of decent move, but again, nothing sort of substantial. Really down here, we've got the main price targets. I think these two are probably more likely to sort of hold weight than this on the downside. I know that kind of seems a bit sort of whatever and shit because we've got such a large move up to the top side here, and we're sort of putting a lot of emphasis on the break to the top side. But you've got to remember that we're in a very strong downtrend. So I think sort of any sort of little push up is going to be sold into by the higher time frame moves, and pushing down to here, you may see some people take profits, but I think the bigger risk is if they break down to the bottom side here, you're outside this big range. And I think this big range is more important than just this little tight one. that we've been sort of seeing move around here. So, I wouldn't put a lot of stock on the thing bouncing or US dollar bouncing from this level here. I mean, it's only a stone throw down to price targets one and the measure move price target of the larger range down here. But I would say on a move to the downside, these are the two areas that I'd be sort of looking for things to sort of maybe start to see a little bit of US dollar strength come back into the market. Again, that's the bigger picture, well, the medium-term picture. Short term, we had a little bit of a gap up. It's just fluffing around a little bit this morning. See if we can sort of find much of a sort of level that can line up with a few things. I'd be happy to sort of actually work more off this line here than, say, putting a line across here. Only for the fact that you've only really got two stops there. We got two touches here. This gives us three touches, which I feel we can sort of say the market's respecting a little bit more. We can join these two highs together here and sort of say that these are your kind of levels here. So early indicators, I would say, would be, a break of this falling resistance. So again, look, this is another thing. This is why we look for confluences. You break this short-term highs, and if we see the sellers aren't still driving us down, i.e. they break through, you've also got this horizontal that we got marked out for this little part of this range here. This will be your move if you get to the top side. If you break out the top here, you'd be looking for a break, retest, and then a move up to over there. That's how that will eventuate if we are to see a US dollar sort of squeeze and break to the top side. I mean, at the moment, it looks a little bit like it wants to move up there. Obviously, you can see the buyers are pushing up, they're pushing up, they're pushing up. Sellers and that, they've been sort of, still pushing it down, but they're not as hungry. They're not coming as quick as these ones here. So that's the move you're looking for if you're looking for a topside move on US dollar. But really, as I said, it's only got about a sort of 50-cent move to the top side before I think it gets sort of like plonked on the nose. Geez, these things are taking off. We got sort of silver's just shot up 20 points. Yeah, Aussie's up. What's that? 25, another 20 points from the lows. Yeah, it's really sort of kicking along there. Downside, I think, would be pretty much if we break through this falling resistance here. You could say there's little horizontals here, but there's too many of them, even on this 1 hour chart, to sort of say, oh, this is where the buyers are sitting. The buyers, as you can see, they're not sitting on a flat line. They're progressing. Maybe through this area here, what you could call your little sort of swing, your swing low point. So through here to sort of confirm it. But I would say pretty much what you'd be looking for is a break of this rising support. Maybe a little bit of a bounce there, and a move down to there. They're the two paths that I'm kind of looking at with DXY sort of through this session. Sort of see sort of how they sort of play out. So you're seeing gold's just back up to 26.30 as well. Okay, so you're seeing a couple of things which are a little bit sort of contradictory because obviously Aussie and gold, silver, everything's moving up, but DXY is also not showing super weakness. I mean, it's not pumping, but it's up. At the same time, you've got, I mean, if we put these side by side, if you jump across and say put gold here and put this also on the, what's this one, 15 minute there. You've been seeing them both push up. I mean, as I said, this is only 15 minutes here, but, they're both moving at the same time. So one of these is lying. So this is either going to be a large liquidity grab with gold and we're going to see a continued push to the downside, or we're just going to see US dollar rollover and push down here a little bit. All right, let's push on with things. So speaking of gold, we go across there. As you can see, there's a little bit of a push up. So again, this is the point of planning things out and planning it out on the weekend. If you watch the weekend analysis, this is where we were saying the price target was. This has come in absolutely perfectly with rising resistance, hit the price target and push back. Hasn't fully fallen over. I mean, remember, it's in a bullish momentum, so it's not going to fall over in one go. But you start to pick out little levels where you'd like to sort of see it break underneath. And say you break under 26.13, then you can expect to see a bit of a pullback. Let's get onto the 4 hour at least here. So you can see it's obviously come up into this price target, clipped it, sold down, clipped it, sold down a little bit, and now it's really just sort of consolidating this top area here. So if you do break above this here, I would say I'm not calling tops on these things, but I would say we are getting close to a top. The thing is with a structural sort of setup of this, you've got this resistance. This is the third setup here. We've seen the markets obviously watching this line. They've sold it down. They've driven it up into this level. They've sold it down. It's consolidating down here. If this pushes through here, it could be seen as a bit of an overthrow, which means that you could see a fast move up here. But again, I would say that that would then be your little medium term top, and we'd sort of see things come back down. Overthrows generally are, regarded as a bit more of a sort of like you want a sort of nice, easy, here are the buys, here are the sells, here are the buys, here are the sells. When you get things just going off on a tangent and they go on these super steep, mediocre rises, generally, as they sort of say, fast up, fast down. You would see this move up very fast, maybe push towards 2,700 or something even. Who knows? We have seen some pretty fast moves with gold in the past, particularly when it does eventually come to its top. Remember back last year, $50 in 15 minutes or something, I think it went, and it just was crazy up to the top, and then it dropped $150 in the sort of like coming days or week or so afterwards. So, if we do get an overthrow of this area here, I'm looking for a fast move up here, and if we get that fast move up, fast move down, that's going to be a very strong top signal for the medium term for gold. Doesn't mean that we're going to be coming all the way back down over here. I mean, as I said, I think this is still a plausible area that the market never revisited. Let me just drag these ones across at 25.30. We had that range, broke the range, and then it's just run. And it's gone up and up and up with it all. So obviously, like, runs can't last forever, but if we do see a big fast move up here, maybe this would come in, and this is why I like to use the term sort of cross-chart confluence. If we get back onto DXY for 2 seconds, where we at? So I put this on here, DXY. This would be a very plausible outcome for a fast move up in gold. Fast move up in gold, fast move down in DXY. DXY hits these lower levels where we've got measured moves, we've got strong horizontal, like historical supports, and then people decide to go, you know what, that's it, that's a top for gold, sells down. That says, okay, you know what, we've hit our price targets, US dollar is in a very strong sort of historical support, or it's overshot and hit its measured move, and they start to buy that and push it back up. So you'll see the flow so gold would come up, US dollar down, gold down, US dollar up. That's a very plausible outcome for a medium-term play, in my opinion, for sort of outlooks over the next couple of months or so. But the here and now for gold is, look, it's just consolidating the highs. It hasn't done anything yet. If it gets a push down to retest these highs, the wick highs from what was this, from FOMC, I would be sort of looking to buy and sort of find this little sort of range moving up here. The best thing for gold bulls at this period would be a consolidation through here. As we saw, broke up here, consolidated, broke higher. If this thing just breaks higher, breaks higher, breaks higher, there's too much profit on the table. Too many people are sitting there going, oh, well, you know what, as soon as there's a sign of weakness, they run for the door. So once you do these sideways, what's happening in a consolidation is basically you're just swapping hands. It's just churning over. There's going to be some people that are holding it and holding through profit the whole thing, of course. You know what I mean? But at the same time, you're getting people take profit, people buy new, people take profit, people buy new. So all of a sudden, people are sort of in new positions from these levels up here. So they're not so like, oh no, I've got to lock in my sort of stuff straight away. Certainly once this breaks down here, they'll protect their positions and you'll see a fast move down, for instance. That's why you sort of plan for both sides of a sort of a consolidation and range break. But this idea that's happening through these consolidated periods, that it's going into fresh hands with fresh people with their sort of entries or averages and that a little bit higher, and they want to hold it to move up to get more profit and have it drive out to the top side. That's why they're not sort of like, oh, Jesus, drop down a little bit, I'll bail out because I want to protect what I've got. Well, profit-wise, what I've got. Obviously, if it does break down over here, then they're protecting themselves from loss. But I think the best thing for gold in a medium term would be to consolidate But if it does decide to run and run hard, and we do see that breakdown in DXY, I'll be looking for sort of medium-term reversals coming soon, and that'll be my indicator to start really sort of looking at sort of what we could be doing for a bit of medium-term US dollar strength. Okay, so again, bigger picture, smaller picture. At the moment, we'll see it push up a little bit through here. We know that this is a little bit of an area. As you can see, it was resistance, it broke through, didn't hold it, and now it's coming back in as a little bit of support. So above, take out proper highs, so wick highs, so above sort of 26.35, then on with the show. But I would say the best thing for it to do at the moment is just to consolidate. I'm actually going to be holding fire on gold just at these levels, just to sort of see what it does. If it drops down, I'll probably look to buy some, but at the moment, I'm not really looking to buy too much in this level. Okay, flip across. We've got silver kicking back in here as well. So silver actually sort of respected its sort of this medium term sort of rising support, as we can see sort of coming through here. Came in, clipped it yesterday, and just took off. So we could take this off because this didn't play out. Price target's probably still up over here because we do have a little bit of this range that it does, apart from this little drop down here. It sucked out that bit there. What's this? Oh. The range still keeps it in play for that kind of level of price target, which again, we know is also the previous highs over here. So I'm still looking for a break to the top side here with the alert still sitting there. If we get that break there, I think we're going back up to 32.22. And again, this is another thing. Maybe we see a big run on gold. Maybe we see a sell off on DXY. Would see the flows come into the metals, hit these levels where we know a historical sort of resistance parts, and then maybe we see a little bit of a further pullback with these things. But for the time being, it's respecting this channel through here. It is coming up into a little bit of a wedge, potential wedge set up over here. So I think the danger with this for bulls or long positions is if it really breaks here, if it takes out those lows. So we go underneath here. So let's put an alert here. We're going to say a deeper pullback. Pull back, look for shorts. Once that alert goes off, I'll be looking for shorts. At the moment, I'm buying dips. And we'll see how we go with that. All right, onto copper. Copper kicking on. And this is what I was saying yesterday, the other day, I don't know, at some point I was saying it. Come back down into this zone. This is where we look to buy it. I actually picked some up. Let me just have a look at where it was. I don't know what account it was on. The 42,899. So 42,899. 899. So where was it? 899. So anyway, around in this wick down here, it was about this. Anyway, point being is that look, we had this break up here, and this is what I was saying over the weekend. If we see, we should structurally kind of see this break retest, which is what we got. This is why I bought it, and then a takeoff. I mean, look at the path. Back here, retest, go off. You know what I mean? It's the same stuff every time. You break out, you got to retest that part, and then on the way. If you leave these areas unretested, from your breakout, that's generally a sign that it will revisit that at some point or another. And so, like I showed with gold before, we had that breakout of 25.30. It never retested it. Same sort of thing, remember with Aussie. So just to flip back onto this is the reason that I was saying down here was the time to get out, because we knew 66.40 was a strong breakout point. And look at what happened when it broke out. It broke out and did nothing. It didn't do nothing. It took off. It didn't sort of come back and retest it. Eventually went up to 68, came down, it retested it, and then went on its way. So the fact that it retests it early sort of bodes to the sort of falls into the side that it's probably going to go off a little bit harder, and so going to keep running a little bit more. So certainly if we get this alert going off here, we're going to be taking off, and as I said, up around I think 45 is where we had it, is the sort of price target that we're looking for up over here. Yeah, just under 45. I think sort of would be a reasonable sort of short-term sort of target for copper moving forward there. Certainly, this RSI is, and this is on the 4 hour, is very much in a position to support a run if we should sort of break through this area over here. And I would say, yeah, up around that sort of 44.48 to 45, I think there is a decent sort of price target for us up over here. So, oh, 4.8 to 5, this level here. But of course, we know sellers are sitting here, 1, 2, and coming into it a third time now. Sort of selling back. Where we are, 11:30's just ticked on. We sort of see how that goes. But certainly, I think on a clear break of this level here, we've got a nice little move of another 2% up until that price target. Cool, and finish off with China as it slowly sort of comes down here. And I mean, again, this is why I like sort of putting these paths out, because you can see we were down here and I was like, look, come up. If we do get a push up, retest, and then potentially just move down here. And why is that? It's because this was support, this was support, this was support. It's now resistance. It's the same thing. Doesn't matter what you're trading. It doesn't matter what your time frame is. Obviously, there's more significance with some things, and some things react differently in that. But the general idea of price structure and price flow is exactly this. And this is why we say, look, it's broken down here, retest, and on its way down here. So now, if you take out this level here, where we saw the buyers sort of try to do it, or whether the shorts are covering, whichever, whatever, doesn't really matter. If this level here gets taken out, that's your support, resistance. Now it's testing this leg here. Are we going to see double bottom, higher low, lower high? That's pretty much where it's at there. So if we sort of take out that level down there, then we're going to be going for the next leg down to the bottom side there. And we're seeing DXY sort of sell off a little bit as it is. All right, look, that's it for the charts. Have a quick look over what news we got coming out today. As I said, the big one is the RBA 4.35. So it's expected to hold there. That's fine. We kind of know that. 3:30, the press conference. That's probably what's going to be the big mover. Look, the press conference isn't quite, well, I mean, they're never super exciting, but they're not quite as engaging and market moving as say the FOMC and the Fed are. But it still gives us this idea and a snapshot of their sort of thinking moving forward towards the end of the year. I think the market's very much, I mean, it's pretty much guaranteed, universally guaranteed that they're going to be holding today. I mean, if they do shock one way or the other, we're going to see fireworks. If it does hold, I think maybe like, 10, 15 point move. Either way, settle out, wait for the press conference, and then sort of see what they talk about. Some of the market seems to be thinking that we're going to be getting cuts by the end of the year. Only marginal. I think it was 15 base point cut by the end of the year. So 4.2, that would make it. But if you come down here on this side as well, this shows where everybody's rates are at. And as you can see, Aussie is very low down here, despite all these other people sort of cutting. You know what I mean? Everybody else has started cutting. Aussie isn't cutting because it didn't go as high. We've still got inflation at 3.5%. That's another thing to keep in mind. We've got CPI tomorrow as well. And CPI, they're expecting a massive drop off. So I would be wary about sort of Aussie longs, the legs that this may have, having, such a big sort of drop expected for tomorrow. I thought this may have weighed on Aussie a little bit more through the start of this week, but it's not, and we're pushing to our highs, and we're on a breakout level. So it's interesting to sort of see where this happens, but maybe we get some sort of hawkish tones, we get breakouts, and then we get a bit of a reversal of that move tomorrow through CPI. So I think sort of like definitely if we get the breakout and we sort of ride some longs, I think I'll be looking to book some profit before CPI tomorrow, which is 11:30, so earlier in the day. All right, that's it from me.